So last night after the bell, Nvidia released its quarter four earnings, and it was absolutely insane. It shocked the market, and the stock price is absolutely pumping, is what I would have said if Nvidia is not down 4.4%. Investors are still worried about this AI capex spending. And like I discussed in my previous video, a lot of investors are shifting over their capital into these halo companies, heavy assets, low obsolescence. So Nvidia basically brought down the entire market. And it's weird because their earnings was actually really strong, which I'll dive deeper into. But the S&P 500 as of now is down 1.08%. Dow Jones is down 0.45%, and Nasdaq is down 1.82%. This was kind of the big catalyst for the AI earnings season to see where Nvidia sits. And I think if investors were not worried about the large amount of capex spending and whether it will really pay out, I think there's going to be a rebalance into the AI trade. But investors are still worried. So looking at the AIQ here, which is a ETF that invests in AI and technology companies, right now it's down 1.09%. And at its high, which was on Wednesday 28th in January, it really has not been able to reach back to that level. Investors are still kind of figuring out this whole AI thing. It's not really paying out if you're holding these companies long right now. They are struggling. And like I said, diversification is extremely important, but let's dive deeper into Nvidia's earnings report. So all things considered, they had a absolutely insane earnings report. Record quarterly revenue of $68.1 billion, up 20% from quarter three, and up 73% from a year ago. Their record quarterly data center revenue of $62.3 billion, up 22% from quarter three, and up 75% from a year ago. And record full year revenue of $215.9 billion, which is up 65%. Now the outlook is even more crazier. Revenue is expected to be $78 billion plus or minus 2%, and Nvidia is not assuming any data center compute revenue from China in its outlook. That's a huge increase going into the first quarter of 2027. Their gross margins are expected to be 74.9% and 75%. And their operating expenses are expected to be approximately $7.7 billion and $7.5 billion. Now, I think really that this shows that despite the large amount of capex spending, in the case of Nvidia, they do have a pretty high. They also announced this huge strategic partnership with Meta. They announced a multi-year, multi-generational strategic partnership with Meta spanning on-premises, cloud, and AI infrastructure, including the large-scale development of Nvidia's CPUs, networking, and millions of Nvidia's Blackwell and Rubin GPUs, which those GPUs power all of these data centers, which power the AI software. They also expanded their AWS, Amazon Web Services, partnership with new technology integrations across interconnect technology, cloud infrastructure, and open models in physical AI. And they also strengthened their collaboration with CoreWeave to accelerate the build-out of more than 5 gigawatts of AI factories by 2030. Really, if we're digesting all of this, all of these plans are just huge amounts of future revenue going into the company. All of these companies need these GPUs to power their AI data centers and their AI technology, and that's where Nvidia comes in. They give them these super strong GPUs to power these huge data centers, and they're making an insane amount of money on it. Really, I don't think that a lot of these investors are being rational at all. You know, they see that these current numbers are super strong, but they're worried if Nvidia can really sustain that growth. Now, at some point, it's going to plateau. It's going to decline. There's a large market share and momentum into these AI companies, and they're expanding at rapid growth rates, which could be troubling. But right now is the time to take advantage of it. And once you start to see that plateau in the numbers is when you can start to take out your money from these trades. Like I said, the whole market is having this AI anxiety. They're worried about the aggressive spending on AI and whether it's really going to pay out and materialize. And some industries wavered this week as anxieties about the technology intensified, underscoring how quickly sentiment has shifted since the start of the year. In the beginning of the year and in 2025, AI was booming. We saw Nvidia grow in price rapidly. We saw a lot of these other big companies, and now the consensus has kind of shifted. Like I explained, a lot of people are moving over their capital into these heavy asset companies, which is great. way to diversify away from this AI trade and balance out your beta in your portfolio. But overall, some of these companies look really good. My whole thesis on Nvidia right now after this earnings report is that a lot of these investors aren't really being rational, like I explained. I think currently, right now, it's really good growth. I think they can continue that growth. They have long-term contracts with a lot of these AI companies, and they're going to be supplying these GPUs, which is going to bring in a massive amount of revenue. Now, I don't know how accurate this data is, but this is coming from market trends, and they're recording a 95.60% ROI for Nvidia, which is extremely high. And all the way in the beginning of 2023, it was at 13.07%. So this CapEx spending, this large amount of investing to expand their business and their AI business model is actually paying out. Now, there definitely are companies in the AI space that I would stay away from and are struggling very heavily. IBM is one of them. IBM suffered its worst single-day drop since October 2000 during the height of the dot-com bubble. So basically, Anthropic announced that its Claude Code tool can be used to update a legacy computing language prized at IBM, a direct threat. Investors viewed the development as a potential threat to the kind of maintenance and modernization work that underpins IBM's legacy business. A lot of these old companies aren't able to keep up with these new technology and AI trends, and it's reflecting in their stock price. Now, Oracle is another AI company that has been struggling heavily, and they've seen an insane decline. And I made a video on this, but the way they're raising their debt is not safe at all, and they really can't cover it. A lot of these bond ratings are not strong at all, and it caused them a lot of problems. I said in that video that this stock really is not going anywhere. Over the past year, it really hasn't. I think overall, you really need to weigh out these companies. In the case of Nvidia, I think it's a really strong company. In the case of AMD, I think it's a strong company. You know, they are the backbone of this whole AI trade. They produce the GPUs that run these data centers, these AI models. Without them, there would be no AI data center, etc. I think if you're going to invest in anything in the AI trade, it would definitely be Nvidia or AMD, which I'll make a separate video on AMD later in the week. But concentrating your portfolio in AI right now is extremely dangerous, and we've seen this. If you check out my past video, I explained these Halo companies, heavy assets, low obsolescence, like I've been saying. And these asset companies are reliable, they're trustworthy, they sell this physical product. And in the case that the AI market does actually go extremely bearish, you'll have this backbone, create a more low-risk portfolio. Now, I can see where the worry arises for a lot of investors that Nvidia is not going to be able to sustain this large growth rate. In 2020, they were sitting at $16.68 billion in total revenue. And now, in 2025, they're sitting at $215.94 billion. So now the main question to ask is, will this AI market continue to expand? Will the demand for these AI models continue to go up? And I believe it will. We had that talk about an AI bubble about a year ago now, maybe a couple months. And, investors are just always very pessimistic. I don't think we're in an AI bubble. I think investors are digesting some of these financials and seeing that, wow, these companies are growing very rapidly, which could start to raise some concern. I think right now you can definitely take advantage of it by playing it smart and investing in safe companies like Nvidia.